Are you ready to buy a home but don't know where to start? Well, you're not the only ones. So today I'm going to take you through a 10-step home buying process that'll take you all the way from beginning to the end of the journey until you're in your new home. So let's go through it. Step 1 is to plan your finances. Before you start looking at homes, you need to understand your financial situation. And there are kind of two key components. There's your credit score, and then there's your savings. Your credit score plays an important role in what your mortgage rate will end up being. The higher your credit score, the lower your rate can be. Now let's talk your down payment. Loan products range from requiring as little as 3% to 20%. And of course, you can even put down more. The amount you put down is important. Obviously, the more you put down, the lower your payment. But there's also something called private mortgage insurance. And if you put less than 20% down, you're gonna have that added onto your payment. And this is based on the price of the home. So in some areas, being less than 20% could actually add a few $100s to your monthly payment in a private mortgage insurance that protects the bank lending you the money. So it's important to understand how much you're saving, what your target down payment's going to be, so that you understand what's going to end up going into that payment and how it affects your payment in the end. Now, the other part of your savings is also understanding your closing cost. Most people know about saving for the down payment, but they forget to budget in. Closing costs, depending on your area, can range from 2% to up to 6%. These closing costs include things like inspection reports, appraisal reports, title insurance, all of these things that eventually add up, your escrow fees. You need to know that you have to budget for these items. A good tool to test for your financial readiness is something called your debt to income ratio. It's just a quick calculation you can run, and you add up your monthly expenses, divide it by your monthly gross income, the income before taxes, and then take that times 100. That's going to give you a percentage. Now, this percentage is important because you want it to be as low as possible. The max most lenders will lend to you is up to a 43% debt to income ratio. This includes what your new mortgage payment would be on the house you're shopping for, plus all those other monthly expenses. They're going to add those together and take it divided by your gross monthly income to see if you exceed the 43%. If you do, it's going to be very hard to qualify for the loan. So this is a quick calculation you can run to see how you're doing financially. Step 2, hire a real estate agent. This person should be someone who can guide you through the process and help you with all of the paperwork, the negotiation, and figuring out what market it is. Is it a buyer market? Is it a seller market? If you're not someone who pays attention to what's going on in real estate, in the economy, then hiring a real estate agent is the best way to go. Ask for friends, ask family, get referrals, get recommendations to find the person that would help, that's going to be the best fit for you. You want to sit down with them and discuss your goals, your budget, tell them your must-haves and your deal breakers. Step 3 is getting pre-approved in this process. You want to do this before you even look at homes, because most listing agents will ask for your pre-approval letter when you write an offer. You do not want to go out and look at a home and want to write that offer, but then you have to backtrack, go talk to a lawyer, and get that pre-approval letter just so you can submit an offer. That takes too much time, and by the time you do that, the house will probably be gone. Finding a good lender is something the realtor can help you with. You submit documents like tax returns, income statements, W-2s, and then they will give you a pre-approval letter. And at that point, you're ready for step 4, house hunting. This is the exciting part. This is the part everybody wants to do. Sit down with your agent, list your priorities as far as location, size, beds, baths, tour multiple properties, visit open houses, make pros and cons list of every property you see. And remember not to get too emotionally invested in one property. There's always going to be more options out there, so you don't have to rush. Step 5, write up an offer. This is where having a real estate agent is really helpful. Have them run comparable properties to help you come up with a price that makes sense. Sometimes a listing might be overpriced, sometimes it might be underpriced, and you're gonna have multiple offers. This is where your agent, you can lean on your agent's experience and knowledge of the area and the market to figure out the right price to come in at. And all the concessions and terms that go along with that. And out here in California, in a purchase agreement, we have about 50 things we can negotiate. Be sure they include things like the contingencies. This is your inspection and your appraisal, and make sure you have time to actually complete these tasks and be ready to negotiate. Don't be scared if you get a counteroffer. That actually means the seller is willing to talk to you and maybe work out a deal. So take advantage, talk to your agent, figure out how this deal can work out for all of them if that's the house you really want. Step 6, your offer was accepted. Congratulations. Now we're going to go through the due diligence phase. This is where all those contingencies you put in the offer are going to play out. You're going to have an inspection done, you're going to have an appraisal done, especially if you're working with a lender. You're going to get a title report, and that's just making sure that title is actually clean, meaning you're actually purchasing this property from the true seller, the true owner. A good tip during this process is be sure to attend the home inspection. This is where you get an opportunity to ask the inspector questions that point out any concerns that you saw, and he can check those out for you. Step 7, negotiate repairs. Now, that inspection report you might get back and will probably be pretty long and have lots of things pointed out in them. But these problems can range from big problems like a water heater leaking to as small as a window screen is missing. The inspector's job is to point out all of those little details, but some of those things you have to understand you don't need to be concerned about. So negotiating repairs, you have to understand what's going to be priority and not. Big systems not working like an HVAC, water heater, things like that, you may want to go back to the seller and have them fixed before purchasing the home. Sometimes the sellers won't do that, but if they won't fix it themselves, you can always renegotiate the deal at that point to get some money back from them to fix it yourself. An appraiser will come to the house, and this is mostly for the lender. They're going to check the valuation of the property through comparables in the area to your purchase offer. A lender doesn't want to make a loan on a property that comes in lower value on the appraisal than you're willing to pay for the property. Now, having a low appraisal, you can challenge it, or you can pay the difference, and typically the lender will still close on it if you're willing to come up and pay the difference. Challenging the appraisal, you can have another one done and see if it comes up. That's okay. It is very rare in my experience to ever have or hear of an appraisal not coming in at or above the price. And as long as your appraisal is good and you've negotiated the repairs, now you're going to do final walkthrough. This is where you're going to check on any repairs you negotiated. You want to make sure they're fixed. When you write up an offer, you're going to have inclusions and exclusions. Maybe the seller is going to take something with them. Maybe they're leaving appliances. If they're leaving appliances, you just want to make sure they're there. You also want to make sure they're working. Turn on the water faucets, turn on the stove if the stove's staying, check the fridge to make sure it works. You want to make sure all of this works at this time. This is kind of your last chance to make sure that everything in the contract is in the house. And finally, step 10 is closing day. The day you become the homeowner. You're going to go review and sign documents. You're going to pay your closing costs, send the final down payment, and you're going to receive keys. And there you have it, your complete step-to-step guide to buying a home. If you found this video helpful, please hit that like button and subscribe. Leave a comment with any questions you have down below. See you next time.